The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN Friday morning. We got jobs numbers this morning. You have Chairman Powell. He'll be talking today at about 11:30 a.m. this morning. You think Chairman Powell's excited that he gets to talk about today? Going to be an interesting one. Is he going to recalibrate? We'll find out. 11:25, 11:30, he's going to be talking today. We'll get into the job numbers in a moment. We got some decent job numbers this morning. Market reacting to China, reacting to the U.S. as things escalate over and over, as we see. And China hits back with 34%. That is the number. And before we get get into the jobs, yeah, you're talking about 34% for China. From U.S. starting April 10th, and that matches the level of Trump's reciprocal tariffs, which were not actually reciprocal yesterday. We found out that he was just using, right, that equation. Jacob talked about it last night. We've all seen the equation now, and basically that equation more speaks to the trade imbalance versus anything to do with reciprocal tariffs. It's almost like you can't believe what's coming out of the White House. And I stress that, folks, because how do these countries negotiate for any type of, eliminating the unknowns? It's always going to be up in the air. I think it's very difficult right now to have any type of, to eliminate those unknowns on any level, because even if you're negotiating, the negotiating is always going to take place, and it's going to be a perpetual negotiation, at least for the next 4 years. That's what I struggle to see where we get out. Now, you want to talk about where we go. We just almost completed a one-to-one, folks. The S&P's got down to 52.10. 51.78 would have been a one-to-one A to B, C to D expansion. Volume accelerating yesterday. We had the most volume we had since what? You're going back to March 11th. Boy. NASDAQ 100. You're down by 2.4% right now. The one-to-one, that would bring it to 17,397. We're trading at 18,234 right now. Market's got a little bit of a bounce going on from the lows. And boy, these bounces are magnificent when you look at the volatility period everywhere. Dow right now off 954 points, 2.34%. We're trading at 39,822. You see the acceleration of the volume yesterday. And boy, the Russell. Yeah, I haven't done the one-to-one here yet, but Russell, you're off by 3.5% right now. Bitcoin, 83,250. How about crude? Right? You talk about a wipeout, man. From 72 to 62. Just like that, we hit $60.81 this morning. Gold contract trading lower by $25 right now. Silver, yeah, you talk about it, man. Look at that move in silver, right? We've been talking about silver weaker than gold, and boy, yes, pretty dramatic. Silver, yesterday alone, right? Gold got a little bit of a bid yesterday. Silver dropped straight from 35 to a 31 handle. Today we're trading at 30.76, and look at that volume on the silver daily. They were selling silver before they could even get their hands in their pockets to find those silver coins. They were sold. Compare that to gold. Now, huge volume again. Interesting, right? We've been commenting. You take a look at gold. Gold explodes higher to reach 3,000 on March 13th. That was an expansion of volume. That volume was 236,000 contracts. Yesterday, 369,000 contracts, man. Whew. You talk about it. You talk about it. All right. How about notes and bonds? Well, one way to cheapen the cost of our capital is to tank our economy and decrease our growth rates, which brings down the yields. It's tough to almost get out, folks. The logic going on here, okay? When you hear people tell you that it's a great thing that yields are going down because our cost of capital is going to be less. Yes, the cost of capital is going to be less, but I would say careful what you ask for, okay? Anybody could have tanked our yield market in a moment by enacting any policies they wanted that tank the market. People sell the market, they buy fixed income, and that causes our yields to drop. If that's a recipe for future success, then I struggle to see the details of how that plays out. Now, I know that we have trillions of dollars in debt to refinance, but the long-term plan for future generations, folks, doesn't really play out with that type of logic. When you hear people say it's great, remind them of the fact that the only reason that yields are going down is because nobody wants to own the economic engines of this country, which are companies, okay? Everyone's selling equities, and they want to hide anywhere they can. There's still fixed income, guaranteed income that you can get. They're doing that. The cost of that is going up. Everybody's trying to hide there. That is decreasing the returns you're getting. And that is not a future recipe for success as generations go. Okay, it's one way to rationalize what's happening, that somehow there may be some game plan that everyone just can't understand. But remember the basics. Okay, and remember the fact that the only reason yields are dropping is because everybody's afraid to own companies right now, because our economy, the growth of our economy, is getting slashed. Okay, what happened to, remember, we've always heard, this is where it gets difficult. You want to square what you hear everywhere. We could never we could never increase taxes because that would hurt growth, right? We need to grow the economy, okay, and decrease the amount of taxes we're spending on certain areas. But we've always heard the arguments that you got to grow into it, right? It'd be a lot better to grow into it. Excuse me, 1 second. And it's just amazing to hear that the other side of that, now we're going to shrink into it. We're going to shrink our economy so well, right, that stocks are going to drop so well that everybody's going to run to fixed income, okay? All retirees, you're looking for fixed income, you're in CDs, well, those rates are going down. Folks, those rates are going down. And yes, the one benefit is we're going to get to refinance at a lesser rate, okay? There's another way to grow into that and to pay off our debts, and it might be not tanking the economy. So that's where I struggle. You're hearing a lot this morning, yesterday. And that's where I want difficult conversations, folks. The difficult conversations aren't taking place. Everybody wanted reciprocal tariffs. Nobody who is in support of reciprocal tariffs has anything to say about the formula that makes no sense that Trump used. What about that part? Okay? I want to hear somebody rationalize why that formula in particular is fair and reciprocal. It has nothing to do with reciprocal tariffs. So, yeah, like I was saying yesterday, just be willing to discuss reality when you hear things that make no sense whatsoever. That's what I would encourage. Yeah, and it sounds harsh, but it's not, because it's the reality of what's going on. We talk about when Trump ran 4 years ago, all I heard about was that Biden was going to crash everyone's 401k. It's going to be the worst thing ever. And now those same supporters, all I hear about is that the market was due for a return. It's great because our yields are going down. What I fail to understand is, how does this transform everything in terms of, do future generations just work in factories at a time when automation is in vogue? How does this save the normal worker? You have Detroit workers up there on the podium, and this is a real question. How does this, I struggle to understand how future generations, are we going to be a factory intensive at a time when automation's coming into factories? Where do those jobs come back to in the same degree? We're going to make everything here? So are we going to train future generations to be factory workers again? That's the future success? Somebody help me out. S&P's off 133. We're coming back. We're talking jobs, folks. Don't go away. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. NASDAQ 100 off by about 2.6% right now. S&P's off by 2.4%. You have the Dow off by 2.5% right now. And you jump over to the jobs numbers. So we get non-farm payrolls for the month of March. Strong numbers. 228,000 jobs added month over month. Estimate was about 140,000. Average hourly earnings, 0.3% on the month, right in line. Unemployment rate rises just above where you were expecting. We were looking for 4.1. It comes in at 4.2 is the number. So, yeah, pretty strong numbers is what you get there in general. You did have a downward revision in February. So hourly earnings, as we said, 0.3% is the number there. Yeah, and there are the revisions. Added 48,000 fewer jobs than initially reported. Okay, so January and February, you take out 48,000. We do beat, but the net number less than what you'd see on a headline basis. So where do they hire? Healthcare, 52,000. Retail trade, as workers come back from a strike. Transportation and warehousing, up there as well. Government jobs, that one's going away in the months to come. But nonetheless, strong numbers, man. All right, we jump over to the VIX this morning. Where do we go? We can go anywhere, man. Some of these equities. We're going to take a look at these equities in a moment. We hit 45.56. Great post by Elo. Is that true? In Tiger's Den. Did the VIX stay above 50 for 2.5 months in 2008? And I hope this isn't 2008, folks, all right? Because 2008 was not a making, it's not something that was made by the politicians. 2008, that was a bubble like tulip mania style. Let's go back. terms of even the valuations. It got talked about this time around, of course. Look at that spike in that VIX. Yeah, look at that. We sure did. Look at that spike in 2008. History, it may not repeat, folks, but boy, when you see the type of volatility, okay, and if this is really a reckoning like those like to talk about, then maybe we need a little bit more capitulation. There's a great comment on the Den last night. Somebody was saying, have we really even seen fear yet in this market? It's a great point. Great point. And that was yesterday. Today we spiked to 45. So, yeah, that's a little bit more fear than yesterday. But even 2 days ago, folks, we were at $21. All right, you get the tariffs, we're up to 30, we're up to 37. So, yeah, we'll see where we go from here. But you got markets accelerating right now. And what makes this difficult is, just listen to some great commentary on Bloomberg this morning, Mohammed Al-Arian. He made a great point, I thought, which is if there was some level of certainty that you could negotiate, make a plan, bring something to the table, make a negotiation that's going to go forward that you can reliably trust that's going to stay, then negotiations might be able to take place. But right now, put yourself in another country's situation, and it's very difficult to make that negotiation when things could just change in a heartbeat next month or something. That's going to be one of the obstacles. I don't understand how the volatility in this market and the unknowns get taken away. That's one of the tough parts to see, how that part allows the markets, it's a tough one, man. I mean, look at some of these equities. You want to talk about it, right? China, yeah. How about Amazon? Amazon down another $10 in the pre-market. We jump over to Apple shares, down $9 right now. Walmart held up pretty well, down about $3, but all things considered, holding up pretty well, Walmart right now. Boy, one of the other ones. How about Gap yesterday, right? What are we doing today? Oops. Yeah, down another $1. We're checking on Restoration Hardware. Boy, this was down another $10. It was a Max Payne situation yesterday, and it's going to continue today. Boy, this is one, folks. If you're ever in equities, right? So if you're, here's what I suggest, okay? There's a lot of people right now, I'm sure, who are a little fearful. They're looking at their portfolios, okay? They're wondering what they want to do. What I encourage you to do is make a plan right now, all right? If you're okay right now, make your plan right now. When you're talking about retirement, stuff like that, it's something that you never want to not prepare for what could take place, okay? This market has had a heck of a run, all right? It was not due for a pullback. That's what a lot of people say. It was not due for a pullback, okay? It is having a pullback because of the economic policies put in place by the president. That's a different scenario. These are the pushbacks that I'm going to encourage, okay? You can make the case that these are policies that are good in the long term, but of course they're going to be harsh short term, so markets are reacting. Don't let people make the case that the market was just due for a pullback. That's irresponsible talk, okay? You can make the case that short-term pain for long-term gain. All about it. Okay, but don't tell me that this is just the natural course. It was due, all this stuff, okay? But what I do want you to encourage to look at is the market. What did my dad say? Market takes the most amount of money from the most amount of people in the least amount of time. Love that line. You hear that, folks? You heard that one before? My dad's phrase. The market takes the most amount of money from the most amount of people in the least amount of time, okay? What I encourage you to think about is that there's definitely the possibility that we have farther to go, okay? Now, I don't know if that's the case, and I imagine at some case there'll be a rebellion, okay? At some case, even voters are going to look at their 401ks and say, man, I don't know if this is what I signed up for. And then Trump may come to the rescue, all right? But there's, I'm sure, many people that were in Restoration Hardware, folks, when it was trading at $500, $460 2.5 months ago, that never would have thought that they could lose 70% of that value over the next 2 months. You always want to be prepared for scenarios like that. Never put all your eggs in one basket. It's just one example, but there's many examples right now all over this market, okay? All over it. Yeah. Jump over to Tesla shares right now. Down to 254 from 267. We jump over to Google shares, trading at 149. All right, we check in on yields this morning. We're at 113.20. And you're talking about a 10-year that's well below. We're at 3.92. 3.92% right now. Whew. Yeah, you jump over the dollar, man. Dollar at 102.14. So it is, and this is where when I'm hopeful to have conversations, okay? And what you saw yesterday was frustration that the conversations taking place aren't based in reality, okay? And it's today too, because the conversations taking place aren't based in reality. What happened to reciprocal tariffs? For all the fans in the den and the YouTube Tigers Den, these tariffs have nothing to do with reciprocal tariffs. Nobody missed a beat. Doesn't matter, right? The logic taking place doesn't matter what happens. What happened to reciprocal tariffs? These are not reciprocal tariffs, and nobody cares. That might matter, folks. We'll talk about it when we get back. Stay tuned.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento for the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got equities open. We got the trading day beginning. Remember, you got Chairman Powell will be talking at 11:30 this morning. Now, they don't have a Fed meeting for like another month. And what's so difficult here, okay, is that the Fed was not designed to step in the front of this train. The Fed cannot save the economy from policies. You always heard this on the other side of things. And this is where you heard that the Fed couldn't help if you thought that Biden and Democrats were flooding the economy with money through their policies, okay? And the same thing is true on this side. And it was true, right? You had stimulus, et cetera, causing inflation no matter what the Fed did. If you listen to the program for long enough, folks, when we were talking to Kevin Hinks, he used to say it all the time, right? The stimulus, what's going on, the inflation, when we were in those inflationary periods. And it's the same thing true here. Imagine you're Powell, right? What if you come in? Are you going to come in and cut, and then the president makes a change to those policies overnight? Very difficult when you're trying to counteract, and I don't know if they will. You know, maybe they wait for the hard data. That's the worry there with the Fed in terms of where they're going to come in. Now, you take a look, the Wall Street Journal editorial opinion article, okay? And this one's out last night, but you know, and this is the part where I want to have real conversations, right? Nobody is talking about that supports the president that the reciprocal tariff formula has nothing to do with reciprocal tariffs. What happened to fair, reciprocal, all that stuff? So that stuff's just out the window. Nobody seems to care, okay? They make the point in here that worse is the bizarre slapdash way the White House calculated the tariff rates on individual countries. Everyone's going to pay 10%, as we know now, okay? And then they calculated each country's additional tariff rate by dividing its trade deficit with the U.S. by its exports, okay? That rate was then cut in half for most countries. And what that means is that adversaries like Iran, Venezuela, okay, are going to pay lower rates than Europe, Japan, and Taiwan. Where's Russia, right? Nobody cares about that. Nobody's talking. What about the fairness, right? You want to question the logic of somebody that's not being true to everything going on, because nobody's defending why this makes any sense, folks. Everyone's just going big picture. I would love it. Tell me why it's going to be the best and I'll support it, right? I can't make sense of it myself. Yeah. And then you have the fact that, you know, they go into Trump was pushing manufacturers out of China. Well, now they're in Vietnam. So what do you do? That's the problem here. Okay? There's no clarity. That's what I want to stress. The market needs clarity. Okay, even yesterday, I'm watching in the Tiger's Den, great conversations, okay, and I love the discourse, all right, just bring reality is what, okay, but, you know, they're talking about in the Tiger's Den that you had Navarro out there saying there's no negotiation, Trump out there saying, no, everything's negotiation. There's no clarity whatsoever. The market hates uncertainty, folks. That is the most difficult part of this. So you have companies like Nike, they move all their production over to Vietnam, and then that was the most foolish decision you could have made. You know? Yeah. The only silver lining, Canada and Mexico are exempt. Okay, they're compliant with the USMCA, etc. Yeah, and then they go into, which is interesting here, the legal aspect of things. Now, the Wall Street Journal editorial board, run by adults in the room, not a fan of what's going on and the decimation. Somehow they see our stock market getting decimated, not good for America. I know many people are saying the opposite, okay? I have to be sarcastic, folks. But when you listen to people who say, man, this is so great for America that the stock market's plummeting, you know, use your eyes and question what's going on, okay? But then they get into the legal aspect of things. And yeah, I'm not too optimistic right now with everything going on in Washington that somehow the party in control is going to make sure that they're keeping track of what's going on by the Oval Office. But here's where it gets interesting. I haven't heard enough about this. So, Mr. Trump justifies his tariffs by declaring a national emergency under the 1977 International Emergency Economics Power Act. Now, everybody hates when presidents use executive powers, except for when you agree with them, which is a troublesome way to approach democracy. Nonetheless, no previous president had used that law to impose tariffs. Okay, Mr. Trump is stretching his authority, much as Joe Biden did with student loan forgiveness. Well, when you're talking to somebody, folks, ask them if they're on the same side of executive authority for Biden and Trump. If they're just on executive authority when it comes to the person where they think the means justify the end, that's troublesome. Okay, Congress has circumscribed the president's power to impose tariffs, allowing it on imports that threaten national security, Section 232, or in response to a large and serious balance of payment deficits. Well, those companies have payment deficits, okay? Section 122, a surge of imports that harms U.S. industries, 201, and discriminatory trade practices, 301. This is the part I wanted to get to. None of these trade provisions empowers Mr. Trump to impose tariffs on all imports from all countries based on an arbitrary formula. The arbitrary formula part is the one that, if you're a true believer, defend the arbitrary formula because it matters, folks. Where do you get this formula? That's going to decide tariffs and somehow that's the formula for greatness? I want to hear the defense of it as to why. What happened to reciprocal? Why was reciprocal bad and now this formula is good? Because the president said so? No, we need more than that, okay? Section 122 lets a president impose tariffs up to 15% in response to trade deficits, but Congress must approve them after 150 days. Do we respect the rule of law? Does it matter, or does it only matter when you don't agree? These are important, difficult conversations that should be taking place, okay? Because you want to defend the rule of law across presidents, folks. You don't want to defend the rule of law when one president is in power because it's eventually going to happen on the other side, no matter who you believe in. Mr. Trump's tariffs are the biggest policy shock to the world trading system since Nixon blew up the Bretton Woods system in 1971. As with that decision, Mr. Trump is acting with little understanding about the damage his tariffs will cause. The disturbance might not be as little as he imagines. Now, we'll see how it plays out, but nonetheless, the arbitrary formula, we'll see. We'll see indeed. And it doesn't pertain to the market, but, the NSA chief is gone. You have Laura Loomer in there, and somehow she meets with Trump, and then you got 3 national security aides that are out. And, as far as Laura Loomer, folks, you go to, and not sure what's going on, but nobody's really questioning it. They're just blind allegiance is not a way to have a conversation. And that's where I struggle right now. That there's a lot of blind allegiance because even when we get reciprocal tariffs that aren't reciprocal, nobody blinks, right? Well, what happened to the plan? What happened to reciprocal? These are things that difficult conversations should be taking place, and they're not. Yeah. Let's see how equities are trading. Amazon down by 4.4% to kick things off. Apple shares down by 3% right now. Microsoft, if you're looking spots to hide, man, I encourage you to scan this market because even if, and we are gonna, and I don't know, we're talking about are you short in the den right now, folks? Getting short this market. We are gonna have rip-roaring, rip your face off rallies. There are gonna be the rallies like that in this market. I think we have pressure to the downside, but you better be ready for everything in this market, man, because we got volatility coming at you. NASDAQ 100 down 600 points. Dow off 1,100 points. Stay tuned, folks. We're coming back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the fund involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We have markets continuing to trade lower. You got the NASDAQ 100 now off 3.5%. Talk about it, man. And yeah, we're approaching the 1-to-1 here, okay, which is pretty remarkable. You're talking about, you want to put in your shots, about 17,500 is that 1-to-1. Back things up on a 5-year weekly. I found myself last night looking at these charts. You know, if you're really looking, the first step, and yeah, you could miss the buy here, okay, folks? But in this type of uncertainty, the way I'm looking at things is I'm okay missing the buy right now and missing the opportunity cost to make sure that I'm not in the way of this train as it's still going downtown, okay? But you look at the NASDAQ 100, maybe this level of 16,000. You know, we hit a high of 16,767 back in 2021. Putting it back on a monthly, okay? You know, if you're a technical trader, that is your back against the wall, folks. Okay, that's your back against the wall. There's no back against any wall right now, man. Okay, we got a long way that we could be downtown, big time. You jump over to the S&P on the same thing, and you're talking about, that would be a 1 to 1.618. All right, here, I'm going to take off a couple. So there's a couple things to get into here first, okay? First of all, what to look at is the run that we had from 2023 brought us in the S&Ps from about what? What was the low there? 41.22 all the way up to 61.66. You're talking about 2,000 points, almost a 50% run. We just passed the 382, which would have brought us down to about 53.93, and we're about to bounce at the 50% right now, okay? Now, we go back a little further, and you look at where this market is, you know, maybe your next stop. Right? If you're really looking for a technical area, folks, you're looking at about 4,800, maybe the highs of 4,500, and that would correlate. Okay, now we go back shorter term to a 1 to 1.618 expansion. So remember that 1 to 1.618 expansion in the S&Ps brings you down to 4,700, folks. That's 500 points lower. Okay, that's where I'd be looking for a little bit more value. I'm not ready yet, man. All right, like somebody said in the den, you know, if you thought, and it was great conversation in the den last night, that fear hadn't gotten into this market yesterday, well, it doesn't show up in one day, folks. It doesn't show up in one day. It's going to need a little bit more time on that accord. Yeah. And EKS, that's a great conversation, man. I appreciate it. So I'm asking you, how do these tariffs make sense, right? And it's about fair trade and reducing trade deficit by charging tariffs to those countries where we run a deficit. Should help reduce future deficits, and then we talk about Buffett, okay? Fair point. Why is that the formula versus reciprocal then? Why is that the formula versus reciprocal tariffs that were supposed to be fair? I thought we heard all about fairness was about you charge us 10%, we charge you 10%. That's not what's going on at all. Is that a problem? No, it's not a problem if you believe in it, right? That's where, what happened there? Why is that a better policy? Let's go one step further, EKS, because it's a great point. Why is the current formula that the administration is using a better formula than the one that he's been touting since the day he was practically elected? I haven't gotten a real good answer for that yet. Why is that? What happened to all of the talk? I don't know. What happened? No, it didn't matter, right? That's where I struggle, man. All right. No matter where you go in this market, folks. Yeah. We jump over to the airlines. Whew, you talk about it, man. And this is where, folks, you learn a lesson sometimes. You see it. There's nothing like experience in a market. If you thought, who would have thought that Delta would be below where we were in August? The market can always move quicker than you think. Always protect yourself, okay? Never would have imagined that Delta could be below the lows of August by April 4th. Yet here we are. From $70, we're cut in half. If you owned Delta on margin, you're a complete wipeout, man. Who's booking magnificent travel right now? Yeah, JetBlue. Whoo-wee. Down 9% right now for JetBlue shares. And that's after yesterday's decline. Man. United down 9% right now. Whoo-wee. American down 5%. Yeah, and Delta down about 5% as well. Check out the banks this morning. JP Morgan down by 5.3% right now. Bank of America down about 5.5%. We check in some retailers. Yeah, look at TJ. If you're looking for strength, man, I guess everyone's going to be shopping at Marshall's. TJX, you're flat today after being positive yesterday. And if you're looking at TJX, here's two great stocks I was looking at last night, folks, okay? TJX, look at that. Now, yeah, the risk here is that there's a reversal of fortunes, right? Things get changed. People come back in, they buy tech stocks. You're going to pull out of the safety areas, and you might get a pullback. Keep your eye on that channel. Look at that channel, man, for TJX. From $53 up to $125. Put that channel on your charts on a weekly basis. It is strong like bull. Another one strong like bull in a nice uptrend channel, Mickey D's. How about it? Now, Mickey D's down by 2.4% today, but look at the weekly, right? Just very strong right now in this market. We go back to a daily. Look at yesterday's action on Mickey D's, man. It was a powerhouse. We almost pushed to all-time highs yesterday. Yeah, trading up to 320. We were at 326 on March 10th. But again, you back this thing up. Oh, that's amazing. This uptrend channel, man. Look at this thing. Mickey D's in an uptrend channel since we're talking about 10 years, folks. 10 years on Mickey D's. So you're looking for some action right now in this market? Those are two stocks. McDonald's. TJX is another good one. Walmart, all things considered, behaving pretty well. We're down by 1.9% right now. Yeah, we're off of the highs. You put this thing on a daily, though, and we're right where we were trading on March 12th, okay? You compare that to the S&Ps, and you're at 5,200 versus 5,500. So again, McDonald's overperforming the market where we are in that area. All right. You jump to the gold contract, off by $28 at $3,093 right now. There's nowhere to hide in this market, man. Copper, yeah. If you were watching the program, folks, last week, I was talking about copper. I was talking about some of the copper stocks and potentially copper topping out. And yeah, copper stopped out, man. You look at some of these copper stocks, FCX, writing was on the wall. All right, look at this thing. Whoo-wee. FCX down 10.2%. My goodness, you're back to where we were 2022. You wipe it all out. SCCO, another copper stock in trouble. Yeah, look at this thing. You're actually below this bar that you had been trading in from a year ago. When you exploded higher, we're now below that bar. And look at the volume ramp up on this equity. Whew. We'll probably get some volume today. Southern Copper down by 8%. We check around to some other gold companies. Harmony. Yeah, Harmony down by 7% right now. Some other strong equities. New Gold's, all right, breaking out of the channel. New Gold down by 7% right now. Eldorado off by 5.4%. Kinross off by 6.3%. We own that one on the gold report right now. And Sand as well off by 4.6%. As we get the NASDAQ 100 off by 530 points right now. Off 2.84%. Stay tuned, folks. We got one more segment. We'll come back, talk some different equities. We'll take a look at more. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. And you know what? Fletch, great advice. Everywhere you are. We're talking about gold in the Tiger's Den. Put stops in wherever you are in this market, folks. And I've been saying it, and I've been saying it in the newsletters. We're going to get many opportunities. We're going to have rip-roaring, rip-your-face-off rallies, rip-your-face-off declines. The level of uncertainty in this market right now, haven't seen it in some time. So, yeah, put your stops in place. Get a plan in place, okay? Because none of us know really where this is going to go right now. So get a plan in place and make sure you put your stops wherever they need to be and trade with a plan, okay? Yeah, don't let, probably 90% of trading in a market like this is the mental battles, right, of taking losses when you know that the move that you're expecting may be coming in the future. Okay, and I say, we never know. But that type of mentality, we're all familiar with how that plays out. All right, we got a question in the end talking about the SPXS for our Tiger Double Broad. And yeah, so the question here is, with a target of 949, the high on 8.5, thoughts? Now, here's what I'll say to that, okay? This high on 8.5 of 949 on the SPXS, which is the direction daily S&P 500 bear 3 times, okay? So that's the bear 3 times leveraged inverse S&P 500. And yeah, you see it on this chart. This is what the chart looks like, okay? Daily investment vehicles, though, don't always trade in the same way over a longer-term basis. And I'm actually going to be doing a webinar on that coming up in the next month or two, all right? We're talking with direction. But here's what I'll say. If you're trading that, I would try and trade off the ES, okay? And if you're trading off the ES, we almost already got there, right? That low was 51.20 on the ES. I think we made it to 52.10. 54, what did we get to? 52.10 this morning. So you're within 90 points of where we were on that bar. You're pretty close. So I wouldn't let it run too far. You know, you got within almost 2% of that number, and that's down from 61.66. We're coming into that number, and we're probably doing it with volume. Folks, thanks so much for starting your trading day right here at TFNN with me. Stay tuned. Basil Chapman's coming up next. Have a great weekend, everybody. We'll see you.